Hey guys, it's Sasha. There is one big problem with online content about investing. That problem is that the vast majority of content out there just talks about the future with no real accountability, no kind of reflection on how things actually pan out. And worst of all, the creators don't really care. You'll often read an article or watch a video that talks about a particular stock, for example, and the video will tell you that that stock is going to do super well. It is a great investment, and they might even show you some reasons why they think that if you're lucky. But then that video is done, a lot of people go and watch it or read it or whatever, and then time passes, and in 6 months or in a year or in a few years, it is irrelevant. Nobody remembers it. Nobody cares if the person who said all of that stuff actually made a good investment, if that investment was even actually any good. Most people reading or watching probably can't even then remember down the line in a few years where it was that they even heard about that particular stock that is now sitting in their portfolio with a massive big fat loss next to it. And an even bigger problem is that this cycle just goes and repeats itself. Every week, jump onto a new stock. Every day, go and tell a new ticker that's going to the moon that somebody has found that nobody's ever heard of. This one is definitely going to go and explode. Go and invest in this thing. You kind of see these videos just all the time. And some channels manage to do multiple times a day, sometimes multiple times during the day, different stocks every single day. And on my channel, I don't talk about that many stocks. I talk about a relatively small number of very specific stocks because that's what I personally invest in or I'm personally interested in. And I only talk about those. I don't think that there are hundreds and hundreds and hundreds of companies that all have the potential to do extremely well. And on balance, I am pretty happy with the stocks in my portfolio. I have been getting a pretty decent rate of return on them for some time, including over the last year. But I also have been wrong on some of them. In fact, I will be wrong on a lot of them because that is how investing works. You are not ever going to be perfectly accurate. Nobody has a 100% record of picking winners because if they did, they would become incredibly, very, very rich very, very quickly. But you don't hear about the other side of the coin much. It is the Monday morning gambler situation. You turn up to work and you hear the guy sitting in the office, that one guy who is there telling you that they placed a bet the weekend and it came in and their $10 bet made them $150. And how great are they at predicting this particular thing? You won't hear about the 20 other bets that that person placed that didn't win. So I wanted to go and talk about some of the losers that I had, including the really big one, because I think it can teach some really important lessons. The first one that I want to talk about, the big loser that some people are reminding me about is, it's about a video that I published on July 1st this year called Why I Sold My NVIDIA Stock. I sold NVIDIA at that point at about $818 before the split. So split adjusted using the current share price, I sold at about $204.50. And the NVIDIA share price right now, as I'm recording this video, is about $303.90. That is almost 50% up from when I sold just 5 months ago. And here is an important lesson in investing. When you make any investing decision, you do not know what the market will do after. You are not that good. Nobody is. I am not good. I don't know. I have no idea. Nobody else does either. But whenever I personally make my investing decisions, I follow the exact same principles for making the determination every single time. And it's the same whether I buy or sell. Do I see a mathematical upside in the share price? That's it. And when I do see an upside and that upside is big enough and I feel that the error margin around it is robust enough and I feel that the market may well see that in time, I will go and invest. But if I sell when I don't see an upside, there is absolutely no reason why the share price can't continue going up. And in fact, sometimes it might go up. Maybe it will go up a lot. And that will happen far more often than some people realize. Other people might disagree with your valuation. New information might turn up that may cause the share price to go up, maybe cause the valuations of other people to go up. Maybe there's going to be a massive hype drive which will push the share price even higher. And at any one moment, if you believe the stock market is reasonably good on average at valuations, then you'd expect that while some shares might be undervalued, the ones that you want to invest in, there'll be others that will at any one point be overvalued. That is the nature of a market. And at that point, when I made the video, I forecasted that NVIDIA would make 12.8 billion in EBITDA in 2021, up 120% from the previous year. And yeah, that is an incredible assumption. It sounded really, really silly, maybe to some people, but even using these very ambitious numbers, the share price felt too high for me at that point. Remember, before it went up another 50%, which is why I sold. There has only been one quarterly update since I made that video, and the EBITDA for the year so far is just under $5 billion, and it is up about 116% on the same 2 quarters from the year before. So on those numbers, I'm so far pretty much bang on what I forecasted. Remember, the forecaster gave me the numbers that led me to sell. And I gave NVIDIA some pretty ambitious future projections too. I gave them a 50% rate of growth in 2022, and then 35% in 2023, and so on. NVIDIA, by the way, is already an $800 billion company. They are one of the biggest companies in the world. So this rate of growth is a very, very ambitious set of numbers. I guess we will see what the results on Wednesday. The next quarterly results are in 2 days from when I'm making this video. But here is an important lesson in all of this. Some companies will continue going up in share price a lot after you sell out. That is absolutely normal. That is okay. It doesn't matter. That will happen all the time. But as a smart investor, you shouldn't really care about that, because that is not the decision you're worried about. You don't really care about the one particular company that you sold going up, however much it goes up, because that is an anecdotal bit of data. You do not know. You cannot really foresee what the reasons for that were. Some people will point fingers and say, hey, Sasha, you missed out on 50% growth of NVIDIA, so therefore you must completely suck at investing. And maybe they're right. Maybe they're right. But I also made a large gain on the stock at the point when I sold. I am not here to squeeze every single last drop out of every single lemon in terms of juice. I am here to make returns of 20% per year or higher on average over a long period of time, because if I do that, I'm going to do really, really well. And I don't need to gamble in order to do that. The best bit is I don't really even care one iota what happens with the stock when I sell. I'm really happy that NVIDIA is doing well. I love their products. I use their products because I know that many of the stocks I sell will end up going higher. Some of them will go much higher, but I chose to move my money into other stocks at that point in time where I felt I could get a more robust and a higher rate of return on average. Sometimes it's going to be wrong, but other times I won't. And I am here to play the average game. NVIDIA went up 50% since I sold my shares, just under. But the money that I took out of NVIDIA, I reinvested into Lucid Motors, AMD, Tesla, and Fiverr. Lucid Motors is up 86% since that point, AMD is up 74%, and Tesla is up 59%. Fiverr is only up 13%, and I actually put a fair amount of that cash into Fiverr because it was roughly at the same point in time, so I haven't seen any significant upside in there just yet. But that to me is still a really good rate of return because it's only been a few months. And the point here is not that I made more money in other stocks, which I did. In fact, that is just pure luck. I did not expect, I did not know, I did not foresee any of those companies growing that much in just a few months. That is not what I was trying to do. That is just a complete bit of luck. But I always put my money into places where I think the money will work hardest for me. I don't know which ones are going to go up, how fast they're going to go up, but I can tell based on probabilities and the balance of them where I think the likelihood is higher. And the key is to win on averages, not to get the one big winner and ride it all the way to the top, because that does happen sometimes. Maybe if somebody invested in Tesla right at the beginning and they're still sitting in those shares, sure, that is going to be a phenomenal rate of return. But on average, in the stock market, that doesn't happen that often. And more recently, exactly the same thing happened to me with Lucid Motors. I sold the stock when it hit $41 and it is now trading at $44 as I'm recording this video. So I've lost out on even more growth there. And in the summer, I also sold Adobe at the beginning of August. When I sold, it was about $622, and Adobe's share price right now is $657. So there's another 5% or so that I've lost. I could go on and on with this. But here are two examples that are a bit different where I actually made losses on my investments this year, Twilio and Micron. I held positions in both of these stocks, although neither was a particularly big bit of my portfolio. They're both relatively small positions, not one of my big guns, but both of those have failed to deliver this year. And there are really interesting examples, because my models a year ago indicated a relatively good amount of upside for both. But as one quarterly report came in after another, two very different things happened with those two stocks, and they actually have lost me money for different reasons. With Twilio, I actually downgraded my upside projections over time because of the commercial strategy largely of the business. And eventually I sold out of the stock at a loss of about 10%. I lost money on that one, but my math said that the upside just wasn't there anymore. My thesis that I originally had was proven to be wrong. And so when that moment came, when I saw that the numbers just weren't showing me what I wanted them at that point, I sold out completely. Exactly the same as with stocks where I made a big gain. The decision is made in exactly the same way for me. With Micron, something quite different happened. My model continued showing an upside, although it wasn't a very big one, but the market just never caught up to it, and I held on to that position for a relatively long period of time. The share price right now is $77, which is almost exactly the same as when I was talking about it and making some additional investments earlier this year. But I sold a few months ago, taking a 7 to 8% loss on those investments from earlier this year. I actually made a gain on average, but versus that point when I was talking about it, I took a loss. And I didn't even really sell because of Micron. I sold because I was consolidating my portfolio down. That was one thing that I was doing in August and September, but also I saw a bigger and a more robust upside in some other stocks. The fact is, a lot of my investment picks will not deliver. And the same will be the case for everybody else. This year has been phenomenal, it's been great. All of my big plays have done exceptionally well, far beyond my expectations. I haven't had a loser with any of my big positions, and they have all brought, frankly, completely ridiculous results. But this year is not in any way representative of what will happen on average. The likelihood is that next year I'm going to take some massive hits. Maybe we're going to have a market crash. Maybe I will be completely overexposed to the tech sector, and the tech sector is the one that gets smashed to pieces on valuations. And I am going to have a lot of losers in my portfolio alongside the winners, but that is cool. I am waiting for it, I am prepared for it, and I'm here to continue doing the exact same thing over and over and over to get those average returns that will balance out the winners with the losers. And so should you. Do not expect all of your investment picks to win. It won't happen. The last 2 years, what's happened in the last 2 years with valuations and with share prices is not normal. This is not how the stock market will behave for the next 20 or 30 years. You are going to get completely smashed at some point and take big hits. I hope you're ready for it. If you're not, you need to get ready for it. You will make big bets on companies that will fail miserably despite everything telling you that they will do well. You will lose a lot of money. You will sometimes lose 30 or 40% of your portfolio value in just a few days during a market crash. It will happen. The best thing that you can do is prepare for it mentally, learn as much as possible, get better at investing. I'm still learning. If you're not still learning, then you're doing the wrong thing. And keep following the best possible investing strategy that you can. Because investing is a long-term game of averages. It is not a short-term flexing opportunity to show that you've invested in a stock just before it went up by a massive amount. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching. I really appreciate it. And as always, I'll see you guys later.